Hello, I'm Kelly.
I'm Alexis.
I'm Asia.
And I'm Julia. Together we make Glo Tech. Today I will be speaking along with Kelly. I will be going over our strategy and planning ahead, and then she will take over for year 11 performance and next year projections. So to start, we'll begin with our strategy. We started with cost leadership, but our prices were not matching our PQ ratings at all. The PQ ratings were much lower compared to the prices. So if we're speaking logically, compared to competition, the customers were not going to choose our products over theirs just based off of how they were priced. So since year 9, we switched over to differentiation. We've kept slightly above average PQ scores to match the prices that we want to actually charge for our products. Therefore, we've regained our foothold in the market share. Since this was a pretty major strategic change for our company, our numbers have room to improve, especially from this chart with the EPS, ROE, and stock price. We've had to kind of just play catch up the past 2 years, but with each passing year, our numbers have gone from the negatives to the positives, especially in terms of our marketing costs compared to the industry average. So when we plan on improving, we will start with a lot more marketing and make it a bigger budget for each region, especially in Asia Pacific, because we don't have that big of a market share there since we've made this plan. So we are going to make a change of lowering the price in Asia Pacific along with a larger budget so they can get more awareness of our product, but also a more reasonable price for the consumers. But in the other 3 regions, we've created a much larger market share. Before, the percentages for each was below 5%, but now we're above 6% in every region for cameras and drones. And since we're also gonna not exactly raise the prices, but since we do have a little bit of a higher price, we're gonna add more features to both cameras and drones to differentiate us from the competition in the 3 regions. In Asia Pacific specifically, we're going to still add those additional features, but still lower the price to continue to grow our market.
Thank you, Julia. I'm going to talk about our year 11 performances real quick. So in year 11, we did see some major performance from year 10 in a few areas, as you can see based off of the graph or chart that we have on our slide. So our EPS, earnings per share, was up 150%, increasing from $2.90 to $4.60, which is an increase of over $1.50. And then our return on equity is also on the rise from year 10, increasing by almost 5%. And both of these are due to an increase in income as well as a result of increasing the market and advertising budgets on the cameras in all of the regions and lowering the cost of the cameras in order to counteract the marketing along with the financial statistics of that one. And then our stock price was also affected due to an increase in earnings per share, bringing our stock price up to $87.81. And then we see such an increase due to lowering the camera's purchase cost in all of the regions, as I said earlier, while also increasing the marketing, advertising, and retail support budget. I'm in charge of the cameras, and I wasn't really paying attention to that earlier. I was more so focused on the financial aspects of the cameras in all the markets. But now that we are focusing a little bit more on the marketing side, that's why we do see an increase in the earnings per share, stock price, along with the return on equity. And then by raising the budget on all of these, as I said, that's why we did see the increase on all the counts that I mentioned. And then also in year 11, we see a decrease in the market share in Europe, Africa, along with Asia Pacific. And then this is due partially to the exchange rates. Both the euro and the Singapore dollar have been on the decline recently. But hopefully with year 11 coming to an end, we see those increasing. And then moving on to next year's projections. Projections are always just going to be projections. They're never actually guaranteed outcomes until we see the final statements. And so our earnings per share and our return on equity are dependent on our net profit and our costs for the year prior. So our net profit overall has risen from 33,000 in year 7 to 93,000 in year 11. This jump is raising our projections to be higher. Not projections, our projections. My goodness. To be higher than usual performances, and due to our profits have gone up more than our cost has. And then in year 11 was a particularly good year for us in terms of profit versus cost. Our credit rating has gone up consistently since year 7 and has stayed at an A for the past 3 or 4 years now. We haven't dipped below an A minus since year 7. And then our debt to equity ratio has also gone down, meaning we owe less money to investors and creditors than we owed in year 7. And so our interest coverage ratio is also showing that paying back our debts is going to be easier, and we will be able, and we have the cash on hand in order to pay it back as of now. Our current ratio, our assets divided by our liabilities, is the best that it's ever been. And moving forward, we hope to continue to keep it that way. Our image rating has also risen since the beginning, and we made a huge jump from 68 credit image rating to 86 in year 10. And then our PQ rating for both the cameras and the drones is at its highest overall right now. And so we hope that we can get our image rating much higher than the projections that we see as of now. And our corporate social responsibility has fluctuated over the past few years. We haven't really been paying attention to it as much as we should have. But this past year, as I said, we didn't dedicate as much time to it. And so hopefully moving forward, if we do decide to dedicate the time to it, that'll also help increase our credit rating along with our image rating as well. Then I'm going to hand it back to Julia to finish us off.
So for planning ahead in future years, we have goals for the sales of the camera and the drone, and our goals are similar in some areas, but they differ in the specifics. So that's what I'll go into now. To start with the camera, we want to increase the market share in North America and Europe, Africa, but especially in Asia Pacific. We have a huge market share in Latin America. It's 13.3%. So that doesn't need much change right now. So these are going to be our focuses to start to improve. And then to help with our market share, that's why we're going to, again, lower the price in Asia Pacific. We're going to increase the marketing costs, just create a higher budget overall, just to keep up with competition. And since we do have a higher price point, that's why we want to market more to the consumers. And then we're going to continue to increase productivity with our employees just so they can keep up with our demand. Now going over to the drone, we again want to increase market share across the board, but especially in Asia Pacific because that is our lowest. And we'll do that by lowering the price of drones in that region. We also want to increase the PQ rating to a 6, just so our price point makes sense to go with the PQ rating because we're still trying to make some little changes from what we started at cost leadership to now at differentiation. We're going to decrease the production cost because it's a little bit high right now, and we can always do better to lower it, but then obviously still continue to increase productivity because we have not been meeting the demand. For both sides, on camera and drone, we want to expand the customer bases and make new target markets, which means we're going to have to do some new research for the market, and then we can make a new customer base in each region. Thank you.